Now, speaking of breaking the bank, mortgage rates are back up over a big number. The 30-year fixed-rate mortgage back above 7%. There you see it. And that's 10 basis points higher in the last week. Doug Flynn, co-founder, Flynn Zito, here with more on that. So I thought mortgage rates were supposed to be going down, or interest rates were supposed to be going down, and now we're back up above 7. So what's going on?
Yeah, they after that election, after the debate, and the increase in likelihood of Trump winning, that kind of drove interest rates up just about an eighth to a quarter of a point. So that's.
But we talked about. Didn't you and I talk about that, about the Trump? You know, the whole. So it's the basic. It's the. I don't think the Mark Zandi school of thought, but it's this idea that Trump, if he gets in the Republican sweep, that you're actually going to have higher interest rates because of the tariffs and things like that. So the market did react a little to that, is what you're saying.
A little bit. And yeah, that's the theory, is that tariffs are bad and tax cuts are bad. And so, but the issue is the tariffs that they put in place that Biden kept, by the way, didn't turn out bad. Now, if you raise them too high, they will be bad. But it kind of proves that they were probably too low. And tax cuts really should be sort of reframed as tax rate cuts, because people got more money and they spent it, and the federal government actually got more revenue. So it's, you know, the theory is that if you reduce the revenue to the government, they have to borrow more, and that's going to drive up interest rates. But that actually didn't happen with these past tax cuts. So I don't know. The jury's still out, but the bond market kind of reacts quickly to things, and then it settles down.
Because the stock market, you know, the stock market's done well, by the way, in fairness, under both presidents, whether it's Trump or Biden. So, and it didn't react much this week. It didn't seem like to what was going on, had other issues to worry about. Speaking of other issues, what about jobs? So what would you say about, what would you say about the job market right now? How is it in the U.S.? Like, we had private sector jobs today, 150,000 created, expectations 160,000. But what would you say if someone just asked you, you know, how's the job market right now?
Yeah, so the job market is, the trend is that it's gradually slowing. That's where we are. It's still good, but it is gradually slowing. And that's because you see things like that. The weekly claims are up. The continuous claims are up for a number of months in a row now.
Right.
And so I think what you're seeing is people are finding it a little bit harder to replace their jobs. And a lot of the companies, at least that we talk to, if they lose somebody, they're not immediately replacing that job. So that's what's happening there. It's getting a little bit harder. And so what you're seeing is the labor market is continuing to cool down, and economic growth is also slowing as a result. It's ever so slight. You might get these bumps of news that isn't necessarily saying that, but the trend is there that it is actually getting a little bit cooler.
We have a banner there at the bottom of the screen talking about wage growth. The stat I saw on wage growth is if someone that is staying in their job, their wage growth is at about a 3-year low. There it is. What would you say about, you know, our wages? If we're not changing jobs, we're staying in the same job, people are just not getting as many raises, or what's going on?
Right. So, you know, the companies had to give raises to keep pace with inflation. The demand was there. The job market was hot. So you were fighting over employees. And what happens is, as it cools, that shifts some of the power back to the employers to not have to keep pace with all of that. And so people then might want to keep their job if they find out that if they leave, it might not be so easy to replace it. So then that gives the employers the opportunity to maybe not give so much of a raise. And that's the give and take that you have in the job market. And so wage growth has definitely slowed. And then when you add in inflation, that's why people actually feel like, even though they're making more money, they're actually not. Their take home and their ability to spend is less.
Because the hamburgers are going to cost more, as I just told you.
Exactly, July 4th.
Have a great 4th, Doug, okay?
Happy Independence Day.
There it is, Doug Flynn. We thank you for that. And now...